Welcome back. Our next guest believes 2025 will be a good year for the real estate and healthcare sectors of the stock market in the U.S. She also likes silver. We're now joined by Michele Schneider, chief strategist of MarketGauge.com. Michele, thanks a lot for joining us. What's your broad market view, first of all, and I asked this question to a lot of people in your field, with U.S. stock markets posting big gains now for 2 years in a row. What do you see ahead, big picture, for 2025?
Well, first of all, good morning, Paul. Well, essentially, it's an interesting year coming up for two reasons. Number one is that there has been studies about the mid-decade, years that end in 5, and 11 out of the last 12 mid-decade years have been positive years for the stock market. So if you're kind of a statistician, that's something to keep in mind. And secondly, of course, we're heading into a new administration. And so there is a lot of optimism in terms of what will happen now with deregulation and lower taxes and possibly some lower rates. The question, of course, is, will that sustain, number one? And number two is, with lower rates and lower taxes and any kind of impact from possible tariffs, will we then start to see inflation pick up? Because we haven't really seen it go down much further. In fact, many people, including myself, think that there's the possibility that it will elevate, although not too bad, until we get later into 2025, 2026. So I guess overall what I'm saying is I think it could be a positive year, but I don't think third year into the bull market we're going to see quite the gains we've seen over the last couple.
Can earnings from S&P 500 companies keep up with the valuations that investors are putting on stocks right now?
Well, I think, again, it's really going to depend on where you look. I mean, obviously, as we're looking at some of the Mag 7 and the big Momo stocks, we have seen lofty valuations, although some companies are saying that the growth potential is just limitless, like an NVIDIA, for example. What we're hoping is that with any kind of easing in the interest rates and with a sort of a repurpose in terms of how much attention is paid towards the reshoring and coming back to America, that we see a broadening out of the market and we start to see it more going into some of the retail sector, real estate, as you mentioned in the beginning, the small caps. These areas, I think, are not overvalued and do have potential if we remain in good shape.
Okay, you like real estate in the United States and healthcare as well. Why don't you talk about why you like those two sectors?
Well, we are getting a president who is a real estate holder, so we do assume that he will try to keep that industry robust. And also with interest rates coming off, if you look at a stock like SL Green, and some of the REITs, they've done better. So it does seem like real estate, even though it's been such a nuanced field with so much controversy in terms of housing prices and housing starts, and of course, what mortgage rates have done, that we could see an easing. I don't know if I necessarily would think it would be incredibly stellar, but certainly I think it can benefit. In terms of biotechnology, I'm more excited about that pretty much for a couple of reasons. Number one is I do believe that AI has become a thing now in biotech. And what we're going to start to see is a lot of companies using AI for things like patient records or treatment plans. They'll be able to generate them a lot quicker. And so as I'm starting to see companies like Tempus, Pfizer get into that field, biotech has been undervalued now for a long time. So it would be an interesting place to see start outperforming. So if we just look at IBB, for example, Paul, which is an ETF, or XBI is another one, but I like IBB. We're sitting right at major support here after we had the initial sell-off on the RFK Jr. news. And now at 140, it looks great. It looks better over 145. And then if it can get through 150, I think that would be a really good place to look at for next year. Okay,
we've only got about 60 seconds left, unfortunately. But I gather you prefer silver over gold at this point. Do you think silver is going to catch up and close that gap between itself and gold?
Yeah, which is a good thing and a bad thing, actually. The good thing, of course, is that if you are invested in silver, it's not only an inflationary metal, but it has industrial uses. And it went up big time yesterday after China announced its stimulus. And so obviously there is global demand and lots of thoughts about the fact that there isn't really enough silver to meet the global demand. And it's used for a lot of different things. In terms of its inflationary hedge, and this is the caution, is if it starts to outperform gold, that could be a heads up that inflation is getting ready to rear its ugly head again.